Okay, looks like we're live. Morning, everyone.
Morning.
Morning.
How's everyone? All good? Fired up for the weekend?
Yes, we do.
Final
Good,
rush
good,
of
good.
the year. So maybe Marco, do you want to kick us off and give us a read of the markets? What are you seeing? What's exciting?
Okay, so thank you, Francesco. So in terms of the market context, I would say from quite a long time right now, we are, let's say, on the rise globally, and that is due to mostly one news, and that news is, of course, the ETF BTC spot that should be hopefully approved by the SEC on the 15th of January. So to make it short, a lot of traditional TradFi providers or TradFi actors have applied for the SEC to be listed, to list their ETF BTC spot. The future one exists already. The major difference clearly is the fact that now with the spot you actually buy the asset, so you buy the physical. It's not a derivative, and the difference is, just for everyone who doesn't know this, the derivative is trading with the inventory of the broker. So basically, you do not actually buy Bitcoin, but you buy a contract with whoever is managing the platform where you're trading. That it's gonna be a contract, a CFD, a contract for difference. So when you buy and you sell, it's respective of the price, but there is no actual physical negotiation and transaction of the asset itself. That doesn't work only for Bitcoin. For every single asset in every market, derivative markets, they're called virtual asset. Work like that. It's basically what you see. You're trading the price of what you're seeing, but not the asset itself.
Can I ask a question on that?
Go on.
Can I just ask you a quick question? You mentioned 15th as an almost definitive date.
Yeah, because every single application, although I have come in at different time and in different ways, I would say, has been pushed at that specific time. It's important because basically what the SEC is trying to do is just having all of them the same day, so that they will not effectively choose somebody. Because even if they have spread in multiple days and then they select, let's say, BlackRock first and say okay to you, so BlackRock will have 1, 2, 3, 4 to 10 days in advance of advantage comparatively to the other. That would mean that basically everybody will flock into their product, giving them an unfair advantage compared to the other.
So about 12, 13 ETFs, right? And you're saying they're going to all be approved together? That's the expectation?
So the bookmakers, it sounds crazy, but yeah, we have bookmakers in finance as well. Given now it's above 90% that the chances that will be approved. So I think it's pretty high, right? Mm-hmm. And that's why we see the price rising. The other, if you want, there is another narrative which is much more fundamental, but it's on a longer view. The narrative is in counting today. The halving of Bitcoin will happen in the 29th of April. This date vary because of the mechanism of how the mechanism work. So it's not something that is decided by one person, but there is a need of enough block to be validated, to be created. So that's an algorithm that basically decide the date. And that's, as I said, April 29th, and at that day will happen the halving. Why it's important? Why the halving is related to the price? We can go in details if you want, but let's say from a high-level point of view, the halving, it's called the halving because basically divide by 2 the amount of Bitcoin that will be rewarded to miners. So if you're a miner and you have one machine, you have two major variable that works in your favor. Actually, that works against you. One is the difficulty, and the other one is the amount of token the reward, let's say, factor. The difficulty, it's a complex structure. I can maybe discuss another time, but basically is how difficult it is to actually generate a block. And this is a curve, goes higher and higher usually. Not always, but let's say it goes higher. But even if that stay constant, after halving, per block you were receiving 6.2, and now we will receive 3.125. So basically half of it. So if that goes, basically you receive half of what you are producing yesterday. That means, in simple terms, although again there is a complexity behind it, is that now you have your revenue in asset, it's going to be half of what you had before. So to keep this as a financially sound business, you need the price to compensate for that.
From a mining perspective, you mean this?
From a mining perspective, we can think like as if you are, doing really mining business, right? You're mining gold, and tomorrow you're going to mine half of what you were mining yesterday.
Sure.
Now the price to keep it stable, you need the price to double almost. Well, it's not a direct one-to-one, but you need the price to raise up so that your business is still safe and sound, it's financially effective. Otherwise, becomes a problem. And as we know, no mining, no validation, no transaction. So basically, the network itself ceased to exist to a certain extent. It's frozen in time. So the price always reacted in that sense in an harmonized way. So it's not immediately, but tends to react positively to halving, because simply demand offer mechanic. When you reduce the emission, so you increase the scarcity, price tends to follow.
Mm-hmm.
That's kind of how it goes. So those two narratives, let's call it this, those two, but mostly the one from the ETF dominating the market. Prices been going up since a couple of weeks now, pretty strongly going up. Like we went from 28 till 44, 40, 45, which is a great rise. Like we almost had times two. And now there is a retracement. A retracement is financially healthy for a long-term bullish scenario. You cannot have a price going up always. And when it goes up, always there is no basically selling side, or there is a very few selling side. It only generates bigger events in retracement after. So it's actually healthy that you have this, let's say, bump along the way in the rise scenario. And they need to happen. The two majors, looking at levels, I think that the two biggest levels, one is 40K, which we already touched a couple of times. And if you look at the charts, basically every time we get into the 40K area, the price bump extremely fast. So that means that there is a lot of interest at that price. There are a lot of automatic orders that are triggered at that price. The second level, looking at where the liquidity sit and also the retracement of Fibonacci, we can see that at 38. 38 is probably the lowest support that we have for the price level. If the price manage to break down below 40, 38 should be the next level of resistance. But let's say already 40 is quite a good retracement, because if you think about it, if you were at 44, which we were, going back to 40 is 10%. So it's a 10% drop. Effectively, for a retracement, it's already good enough. You have 882, which is the first Fibonacci retracement, and it's 12, basically it's 11.2. So we're already close. So 40 is a good area. But I would say register in mind between 40 and 38 as a potentially re-entry point.
So for you, it's definitely on the rise, right? It's like
It's on the rise up until 15. I would say it's on the rise. 15, I would mark it as event. And when you say hey, event is like well, not a singularity, but it's like from that moment on, you don't make prediction, because it's not something that I would always advise people is do not trade on events. Trade on the scenario leading to the event, on the causes that leads to the event. In the 15, price could go 80K or it could go 30. I cannot make a trade like that. Like, you do not know. I know that generally, this is something that probably is a very good discussion to have for everyone. That it's a singularity. We can call it a singularity, not necessarily for the price, but because it will mark something. From that moment on, Bitcoin will make its appearance on the institutional world on TradFi for real. For real means every asset manager in the world now will look at the Bitcoin ETF and say, well, maybe I can put 1%. You have all the asset manager research company. So all the company that provide research to everyone who works in investment, right? Saying that your Sharpe ratio, the Sharpe ratio of your portfolio, Sharpe ratio is the performance of a portfolio, how we track performance for portfolio manager. The Sharpe ratio will increase drastically if you can allocate from 1 to 5% of your whole portfolio in Bitcoin. This research has been published by BlackRock, by the way, so sponsored by BlackRock, by the way, and so I think it's a very interesting thing, but it's kind of a coincidence, right? But on the other side, I think it's quite important to understand that from that moment on, universally we have a ratio. Crypto is 80% retail, 20% institutional. And when we call institutional, it's a lot of professional rather than institutional. But now with the ETF, there is we open the gate to a lot of institutional, like real institutions. We are talking pension fund, we are talking investment funds, hedge funds, which probably they were already in, but and we are talking family offices. So we are talking wealth manager, people that manage private banks, for example, people that manage billionaires and multimillionaires wallets. So now we're going to get that. And that's a completely different behavior from the retail. Retail, it's very volatile. Pension funds buy something and stay there for 20 years with the same asset. It's a different world, completely different world. So that's why I said it's a singularity. Because from that moment on, from the 15, we open ourselves, if we talk ourselves as being the crypto, we open crypto to the institutions. And the market from extremely inefficient, which means a lot of volatility, price going up and down a lot, could start to become a bit more efficient, having institutional coming in. The trick, I think, that's why I was saying, I think it's much better to talk about, trading the fundamentals. Is today business, global crypto business is, let me be 1.5 trillion. Okay, so we are going to open ourselves to 100 trillion, 85 or 100, depending on how you calculate, market. So if 5% of that market goes in, like I said, if 1 to 5% of portfolio will be distributed to Bitcoin, just Bitcoin is not, even just Bitcoin is not capable on the long term to sustain the amount of inflow. Not at the current price, like at this current universal price. You need to have a 10x in order to sustain, for Bitcoin, to sustain just this amount. So 1 to 5% of traditional finance investment going into Bitcoin. Price goes bananas. Okay, and it's a fundamental reality. It's not something that I make prediction. So either there is a distribution in the market, which again depends. Let me try to be clear so that anyone, even if it's not in finance, can understand. Imagine you have this is the only vehicle, this ETF, right? Is the only vehicle that it's regulated, transparent, and accepted for multiple reasons by traditional finance to get into crypto, because it's compliant, because for tax purposes more efficient than actually buying effectively Bitcoin, and it's literally almost the only way. So this is the first time we actually get that, but this is also the only asset. The next ETF is going to be Ethereum, and it's going to come later on. So to actually have a distribution in the market, there's a lot of work to do in the bridge between TradFi and DeFi. Okay.
Okay, but wait here. What do you mean? Like, if we have an ETF approved for Bitcoin, right? Don't you think it will speed up ETF approval for other assets, or you think it's going to be a long process to still get approval on other assets?
Yes. The only other, in my mind, the asset that could be, so Ethereum, yes, because I've already been pushed, by the way, by the same people, and we are talking 10 actors which are interconnected between each other. They're the only one that manage this whole let's get into crypto. So it's not like hundreds of thousands of companies working on this. It's just less than 10 people.
So whole, like, basically the biggest funds manager in the world.
So you have BlackRock, you have Vanguard, you have iShare, you have Fidelity,
Vanek,
yeah, and there's this another one who is Coinbase is actually in this space, and there is another two who are in the same Citadel. Sorry, and then there is one Swiss is the one that create all the ETFs and ATPs. Anyway, doesn't really matter. 21 shares. So and ARC. Those are the people that work, like there's no other. And the next one is Ethereum. And again, with Ethereum, so it could be still sustained, kind of the same principle that Bitcoin has, right? Because it's by large the second asset, non-governed, like non-owned by actually somebody, not governed by one single party.
But we still have a foundation, right? There's an Ethereum foundation.
There is an Ethereum foundation, but I think Ethereum has a long history already of being extremely decentralized. There is a foundation, but it's literally a foundation. The owners of the creators, not the owners, but the creators are very much more into the technology of how Ethereum works, and they have no actual ownership
of the network,
Uniswap, of the DeFi application, the major DeFi application that works on Ethereum. Vitalik is not inside. Okay, so it's not like it has such much. I mean, it's publicly, yes, it has a lot of power, but that's it. Like you need to actually have skin in the game. Like you need to hold tokens, right? And so it doesn't have that. But then going forward, what other asset? Because basically what you need, either you have two instruments. Either you create ETF for every single coin in the top 100, impossible. The second one is you create, three, let's call it three. One, it's an index.
Yeah.
And behind the index is basically a basket of asset. This is complex from the legal structurization.
Because then you need you need to have a clear, let's say, selection process for each asset, right? Because each of them are different.
Yeah, so let's put the case of SP 500, right, which is the most important index in the world. The SP 500 is an index that is created, and what is public is how the selection process, like how it should work, like this type of index. Then we have every single company, the ones we talked before, for example, Amundi is one of the biggest producer of indexes in the world, has its own way of tracking that index. And there are multiple instruments that you can trade, right? There's fees and so on, but let's not talk too much about that. But the thing is, when you buy that, you buy a piece of that, right? You buy a piece of the actual market, because behind the scene there is a piece of the actual market. Today, there's nothing that you can buy from traditional point of view has an index, and then you will buy an actual piece of Bitcoin, Ethereum, Solana, Ripple, blah blah blah. Nothing. It doesn't exist. And I have done my due diligence on this many times. It's the one that exists, they lie. Well, so like this. They buy, since they cannot buy the tokens, what they're buying is the shares. When you have an index that say, oh, we are a blockchain index, we are a crypto index, look at exactly what is inside that index or that wallet, that fund, and you're gonna see there is Coinbase shares. You're gonna find sometimes you're gonna find
mining company, I guess,
companies, because there is a belief that crypto is tech, so it's correlated to tech, and so we buy the tech. But this is just selling a narrative. I mean, advertising a narrative is selling another stuff.
Yeah.
Right. It's like I'm saying, oh, I'm gonna sell you, new ribs from the cow in Argentina, and then what you actually sell is vegan meat. So it's not meat at all. Right. So the only other option, aside, again, a lot of ETF going on, the index is actually funds regulated that will have discretionary power of investing into asset, because instead of selling it to the public as it is, a fund is only for selected investors, and those selected investors are okay. I mean, the SEC is okay with them taking the risks, and at the same time, a fund, what allow you to do is allow for discretionary trading. So you can trade as long as you report it properly. You have much more freedom, and the structure, legal boundaries are more on the reporting side rather than on what I can invest.
So what you mean is those funds, they will manage money, and they will be able to buy spots.
Yeah, but not for new. Well, in Switzerland maybe, but in the US is only accessible for the rich. Let's say.
Yeah, but those funds they can buy on the market like other assets. They don't need to wait for an ETF, right?
Like a fund can hire me to do that strategy, right? I go and I connect to all the centralized exchange that I want, or decentralized, do whatever I want, as long as I have an accepted way of reporting what's the global value of my portfolio that I'm creating, and I have a good custodian. In this case, I would say that the only custodian accepted today from the SEC will be, since they approve, hopefully they will approve the Bitcoin ETF, is Coinbase. If I use that, then I have exposure in the market. But it's a very small subset of let's say, opportunities. But that's how it goes. So you go there, you go with Coinbase for custody, you trade, and then you report the global value. Again, we are getting access globally to a set of people which are management, which are basically wealth manager. And then little by little, I see the regulation, instead of moving into approving more and more financial instrument, which will be the case, I see regulation going towards approving, and we are talking years now, approving the class, the taxonomy. So creating an asset class, which is crypto, and more or less this already exists, and then categorize it in different categories and assign a compliance structure. This is probably something that Francesco should talk about, not me. But once this is basically regulated this way, then you can have everyone from traditional finance start to producing whatever instrument they want on top of it and sell it to retail. But just to be clear, in my vision is reach first, and then after some years, we're going to have everybody else. That means whenever you buy, when everybody else, I mean, normal people will be allowed to buy, you have been front run by all the wealth manager in the world. That's my vision of how things will proceed into the future.
You mean, Marco, you mean in the liquid TradFi markets of ETFs and the likes?
If I'm a traditional market, I have my 401k, I go, I decide that I want to be invested a bit more, like I go to my pension fund and say, I want to have exposure, right? And you select something that allow a broad exposure to the crypto market. If you want Bitcoin, maybe yes, it's possible that with the ETF things will change. But if you want something else, you're gonna wait. You're gonna wait a lot.
Yeah, well, you'll have to keep using the existing crypto on-ramps, exchanges, DeFi.
If you want an exposure, you have to do it by yourself. But it's gonna take. I'm not sure what's gonna be the next. I've been discussing with a guy yesterday, and he said that basically in the UK, so not third world country, in the UK, you pay taxes on chain. The transaction happened, it's registered, that transaction got taxed. The problem is, for anyone who actually have a minimum understanding of the financial world, is that the government has instituted is that, it's realized, the value is realized. So I make a transaction in Bitcoin, I pay 0.1 in Bitcoin taxes, I guess, I mean, just for the example, you pay immediately. The problem is, what if the price of Bitcoin in the next 3 days goes down 20%? Well, I pay the tax on something that doesn't have that value anymore. And in traditional finance, by the way, it doesn't work like that. The unrealized tax that exists, not a lot, but there are, usually are accounted as an average fair price at the end of the year. It's not on the spot as the moment when you make a transaction. So this just to say the regulators and the government will hunt down crypto until it's vehicled from the right players.
They want their share of the pie, but I think it'd be interesting if we move on to the other part of the industry, of the market, Marco. But just so maybe opening up to the rest of the cryptos, we've gone through a little deep dive here in the TradFi bridges to Bitcoin ETFs and the likes. But just before we do that, can you maybe just quickly explain? So we have here in the chart what I think is fascinating, which is the growth of adoption. It's seen through just the number of addresses despite the crypto winter. And if we tie this up with the ETF launch, what is your view on the liquidity of Bitcoin? So where's that liquidity going to come from? As I understand, a huge part of Bitcoin today, in fact, increasingly so, is illiquid, cold storage. It's not on the market. It's not on the exchanges. So as this wall of demand comes in, how are the Van Ex and the the 21 shares and the ARCs preparing to meet that demand? Where's that liquidity going to come from, let alone the price?
I think there are two scenarios. One is those players that you mentioned already bought it. Because it's not, I mean, first of all, I don't believe, when we all work for a big company, things don't happen one day to the other. Like there is no decision, oh, let's make it, and then tomorrow we start. These things take years to be planned. So I don't know, like I think a part of it has already been bought to create sort of inventory. The other side, in terms of number of address, we will not see a massive increase because, well, effectively the player is going to be like 10. Okay, so it's not like changing a lot in terms of numbers. What we see is the liquidity. The major change is going to be in the liquidity side because they need to buy a lot depending on the request. Now, the question is the velocity. Are we going to see like a major increase in demand all at once, or is it going to take some time? Well, the players, I think the best answer should be, if we think about it, players in this space that have this kind of applications on the SEC are big players. Again, it's a coordinated move. It's not like negative. It's coordinated because you are a company and just you make things organized. So it's a normal thing. Okay. So I think they already started proposing, discussing with clients, and eventually having people coming in. By the way, BlackRock news of 2 days ago received the approval to do the pre-sell at Wall Street. So for Wall Street professionals, they're gonna have an into the product before everybody else. You may see it's why so, but again, back to the philosophy that customer protection from a regulator. The philosophy is first, you do not know anything. So we only take it in, we only allow you to do something once everybody else has done it. So the first one to get in, allowed to get in, are always professionals. You can see it the other way around. It's like, yeah, but you give the opportunity to them and not to me. It's like, they will reply, well, but we give him the risk, and to you, it's when things are less risky. So you can see it both ways. But again, I think they have already been discussing. So I think they have a projected roadmap. It's not going to be, boom, it goes bananas because of adoption. If it does, price goes up, its own speculation. But I see like a big trend of raising the value. And you can follow, to be honest, I don't say my prediction is a faster one, but we're going to see a similar velocity. My prediction is we're going to see a similar velocity of the ETF on gold, what happened with the ETF on gold. It didn't spike when the event was called, when it was actually approved. But if you take the chart, you zoom out and you look at on a yearly basis, then you see that gold made after the ETF approval did this. Yep. So long-term scenario is super positive. Okay, our world is much faster, goes at a much faster pace compared to what the world was going at, the velocity at which the world was going when the gold spot was approved. We are in a much faster environment, so I think the time frame will be shorter, but I think that's what we're going to see.
There are 400 million crypto users worldwide already, so I mean, adoption's already started a while back. But shall we move on to altcoins? Maybe this is a good segue. So we've really covered BTC so far, but according to this this chart from Kaiko, I thought it was quite interesting to see how, usually Bitcoin pulls the market up, but then suddenly you start seeing everything else on sort of in the market start bubbling up. So altcoins are very much on the rise. I'd love to hear anyone's views. And Maxime, at some point, certainly I'd like to hear from you on Solana's outstanding performance since the lows post FTX last year. But maybe Marco, first read from you of that part of the market structure today.
I think it's counterintuitive. You have two charts. The first one is BTC domination chart, and the other one is trade volume. As I said, most of the market today, 80%, is made by retail trade. So this market share of crypto trade volume basically telling you what's happening. Is retail, is professionals, bot trading, and so on. Of course, there is much more opportunity if you want to take risk. There's much more opportunity in the altcoins. For a simple reason, lower market cap, higher swings, price swings. Okay, that's fundamental rule of nature. So if you're a professional trader and you have to trade every day, most probably you trade Bitcoin and then everything else. So in terms of volume, most probably it makes sense that you do mostly altcoins. Yeah, so that's the explanation for me to why we have that. After the ETF, we could see this crypto trade volume, maybe not immediately, but on the long term, it's going to be changing.
Maxime, do you want to share your views on Solana? I'd love to hear. So, I mean, the way I'm looking at the macro market, we spent half an hour talking about Bitcoin. We can't touch on ETH, but I mean, I'm looking at ETH as the queen of crypto getting squashed between the king, even more so with the ETF coming through, and Solana wrestling its way up to grant itself more than just a pristine, nice alternative option as an interesting blockchain. It's really grown massively. But Maxime, you're the expert.
I think with the collapse of FTX, we saw those moments where everything, not everything, but market is oversold. I see it kind of this Ethereum moment back in 2020 during COVID. We saw this huge crash, and Ethereum was trading below $100, while during the peak of the previous bull market, it was trading above $1,000. But the technology was still there. Of course, the Solana Foundation itself, like their runaway was, quite short at that time. And Tolly, the public face and the co-founder of Solana, shared it recently in a podcast. I saw him telling, like, yeah, financially after the collapse of FTX, like this foundation was threatened because they lost a lot of money, of course, but still the tech was there, and many investors saw that as well, and they starting to accumulate Solana in the fundamentals, because this is more the trading perspective. I think a lot of good traders and investors saw that Solana was oversold, but on the fundamental side, it's still a very good tech. And on the blockchain trilemma, on my side, what I saw on Solana, it's because when you use it, actually, I've been using Ethereum a lot. And when I switched to Solana, the experience was much better. First, on the fees, it's faster and it works. It was criticized because there was no fee market, but this is solved now. So we saw Solana going down multiple times in 2021, 2022. It was, stopped, I think, multiple times, more than 10 times. But since a year, it's quite stable because now we have a fee market on Solana. And there's also, for me as a user perspective, as I say, you have this experience, and even more on the Solana phone, because that's not something I hear people talking a lot about, but actually it's sold out in the US. It happened just yesterday. So that's a good news for me as well, because I wanted to introduce this topic, but it's sold out in the US. So many people are turning into checking what Solana can do. in terms of a user experience, we've been waiting in crypto to have a real use case, right? Because we had many criticize on the fact that crypto, you can't use it. But now you have kind of this hardware wallet within your Solana phone. You can interact with decentralized application just at the tap of a finger. Your vault is protected because it's really well designed. And there is this trade-off also actually with Ethereum. While when you want to use Ethereum, it's slow, it's expensive. And do people care? I mean, for mass adoption, do you really, what's your decentralization? It's subjective, right? Each one of us have a different point of view on decentralization. Do you need 100 validators, 1,000? Your level of acceptation, it's a trilemma, right? It's the trilemma blockchain in general here that everyone can judge itself. For me, Solana is decentralized enough. It will be more and more decentralized in the future, while Ethereum is more decentralized, of course, but it's trying to keep up with the fact that it's expensive, it's slow, and it's not user-friendly. And now they need to keep up with Solana that has a mobile phone. And for me, they are kind of 10 steps ahead in terms of mass adoption, because once we will see the first real decentralized application running on a phone, and you don't need to, we are close to have wallet abstraction as well, which means you don't need to go through 10 transactions to interact with an application. We will be able to auto accept transaction on certain application, and the UX will be just used. I think we will start to see the first dApp, and you won't really pay attention that it's running on the blockchain. It will be an application, and that's where I'll see the power of Solana at the moment. I think the price action kind of reflect that at this stage, and for me, yeah, they are paving the way to mass adoption on that front.
Very, very interesting. I was just hearing on the Bankless podcast this week, Van Eck predictions for 2024, and there's a lot of this narrative echoed as well, even as far as the expected index, and so the decentralized finance through Solana, not only ETH, as was powered in the last sort of or the first round of DeFi. So I guess time will see as we go into the new year as to how this ecosystem keeps growing. Where does that leave the ETH narrative then? I'd love, does that compress ETH today? Does it's just an alternative use case?
Can I ask also one more question to this, because I think it's correlated. I think there is also a geopolitical perspective. Solana is US based, and it's the only US based technology blockchain. How much of this is an impact? US has basically rejected crypto as a whole, except for two things: Coinbase, Solana. So do you see this as a play geopolitically to try to get foot in the space, or is purely based on fundamentals, things going on?
Yeah, I think it's a good point. Like at some point, let's see, because next year we have the election, right, in the US. So I think we will see a lot of movement on that front. Let's see because with the Silicon Valley, right, the US have been on the forefront of Web 2, let's say. We have this Web 3 narrative that is playing out, and I think it will be a big topic for the next election. And we see a switch, because if I'm right, there will be some movement at the Fed level as well with the new election. So maybe it will change. And of course, if they tend to switch their position on crypto and they become more crypto friendly, it will definitely benefit Coinbase or Solana and all those entities that are based in the US, because there are not so many other players, as you mentioned, and it will play in their favor. If it's the opposite, it could be bad, right? If tomorrow we see the SEC saying Solana is a security, it could be pretty bad, yeah. But I don't see this being priced, right? Because if it was really a threat on Solana, I think this price action would have never happened, like from the people who have much more information and insiders information that I do.
And I also have a question for Marco. Marco, you said that Ethereum is the second ETF that we can think of being approved in the crypto space. What do you think? Do you think this opinion would change if Solana flips Ethereum in the next bull market?
No, because it's already been filed.
Okay.
So it's already in the agenda of the SEC. And I'm not sure even that Solana could be the third one, to be honest. From a purely speculative point of view, I think the third one could be much more probably Ripple. Ripple, because they won the case against the SEC. Partial. Okay. And it was assigned as was classified as a non-security, basically. And with that in your hand, you go to the SEC and you say, okay, approve my ETF, even if this future spot doesn't matter. And if you don't, I'm going to go against, I'm going to just sue you. I'm going to go in front of the judge. And I'm going to say, here we go again. I won the previous one. We want to have a second one. And, it's the judiciary system, luckily, in the US, still kind of work with recurse. So if you already win once and you have a paper that can substantiate your position, it's extremely difficult to overturn what has already been decided by somebody else. So it's going to be a huge amount of money for the SEC to lose again into another court, and then going in front of the Senate committee for refunding and say, well, because somebody will ask the questions like, why didn't you approve? And you went again into another judiciary battle, and you lost it, and you know that you would have lost it. So why are you doing that? And the only answer is because we politically persuaded that this doesn't work. It's back to the money. It doesn't work like that. It's not a good strategy. So Ripple has something that Solana doesn't. Ripple has the paper in the hand saying we are not a security, and this is signed by a US judge. I think that's why then Ethereum and then Ripple.
Okay, thank you.
Not financial advice.
Financial advice, guys.
It's my perspective.
Yeah. That's just
what else, guys? So we've covered the top 3 in town, I guess, at the moment. Any other exciting project you'd be looking at in the market? Any exciting technology you've been reading, picking up on that you're happy to share?
On my side, one, which I was extremely surprised, and I'm not invested. I couldn't. I didn't.
Not a dog meme, is it? I hope. It's not a dog meme, I hope.
No, it's Celestia. Celestia is TIA in the acronym. I was extremely surprised. I was in a conference in Istanbul, and I saw the launch on immediately, like launching the token one day after it was in Binance. Okay. 2 days before that, SMBC, a crypto expert, or it wasn't an actual crypto expert, but it was more like somebody who is following crypto, saying that the major topic, Bitcoin, and then he mentioned, also the tech related things are Ethereum. Yeah, makes sense. And then there is this new thing, Celestia. So first time in my life that I hear about a new token about to be launched in a traditional mainstream media. And it was like, okay, because they're very well supported, very well, they have good backing, and the technology is great. It's like, okay, but is this is what CoinDesk or is CNBC? It's like, didn't make sense for me. Price at launch was 2.5, went to 3, and now today is 12. So fast forward 2 months, made 4x. I didn't invest it because it's like, yeah, but I know nothing about this. It's backed by giants, of course, because otherwise you don't appear on CNBC. Like if you don't. But what they are building, the only things that looks to me is that it's correlated to AI in some way. But AI is like a big buzzword that you can put everywhere and it works. But what does it mean, AI? Like what are you doing specifically? It's a bit difficult to understand. There's nothing actually, there. But I think it's a good example of how in this space, again, 80% retail, when you have big backers on your project, you can be top 50 in 1 month, yet with the right backing. It doesn't take, it takes big names, but it's feasible. Choosing the right narrative and going with big people behind, like big investors behind, puts you in the right spots, and it puts you in the top 50 worldwide tokens for market cap. How long, sustainable, good quality of the project, no idea. Again, seems like it's a good project, but I still need to see what it does and how they will do it. But yeah, so I think it's an interesting example because it's rising up a lot, and I think it's a good also example of how the interaction between TradFi and crypto, everything. If you follow the traditional market, everything that is AI based pumped up the last 3 months, 4 months, whatever. Even with the OpenAI saga crisis, people get thrown out and come back in, whatever. And Nvidia making records, high profit, IMD launching a new chip. I think all of this is going to be and there is I think there is a good narrative also that AI, it's on another inflection point. And the inflection point is now it's not anymore what if, but we have started to see application. So it's not some infrastructure that you don't see in your life. It's an actual, since ChatGPT, it's actually something that everyone start to use. And we see the actual implication of it. And I think it's going to be more and more. And it's going to be about a bubble that will explode, will grow up more than internet, in my assessment. It's going to be massive. It will redefine most of the companies, how they work, how they hire, how they structure it themselves. I think it's going to be massive, but it's going to be a long-term thing. It's not a short-term hype. Just talking about AI. Implication in crypto, I think it's a spillover effect. I think for now there is no actual use case for AI in crypto, but there is of course spillover effect. So if you have a token that is AI, you're gonna go great. You're gonna do great, most probably. Again, not financial advice, but on my prediction, if the AI trend keeps going up in the traditional market, there will be spillover effect in crypto.
But I think we will see, for once, let's say it's maybe not just a trend or fashion to talk about AI in crypto, because we already see some platforms allowing you to decentralize like computation power, file storage, and so on, and AI agent can really run on blockchains. Because at some point it's fully automated, right? So I would not be surprised that we have some real use case. I'm not saying that it's not going to be, you know, the price will be fair, because it doesn't really exist, right? But in terms of utility, I think we could really see some platforms letting you, yeah, as I said, allocating computation power, especially with all the apps you need it. So you might rent some of your space on the computer and so on, and we might see like real application, but not talking about pricing here, more like for use case.
I agree, but it's more infra. So it's something that happens under the hood. ChatGPT was this major sensational event, if you want, is because of it's a user interface. So it's something that Francesco's kids can use, right? It's something extremely direct towards humans. What you're describing, which I completely agree, it's super important and increase efficiency. And I think it should be, it increase the quality also of crypto infrastructure. I think it's not going to spark big popularity. You need to have a front-end user interface, user journey, user impact in order to get that. ChatGPT made that.
They have a coin, by the way. Like WorldCoin is not directly linked to ChatGPT itself, but they are doing, I think, ID on the blockchain with eyes recognition and so on, and it's a WorldCoin, if I'm right, WLD for the ticker, and yeah, it's related to the ChatGPT company.
Yeah, I don't see, because I think it's extremely difficult to see what's the next innovation is going to be. Okay, so before ChatGPT, you could have predicted ChatGPT alongside with other 200 different applications of AI, right? Which going to be, I'm not sure. I mean, I can tell you, for example, one could have been, now that AI is responsive, you could think about all the meta words, okay, whatever they are, be much more reactive and immersive. So you can actually spend time and have somebody to talk to, and you can have a much more interactive experience with that. Still difficult, maybe with Oculus, maybe with the glasses that starts to be with augmented reality. And where crypto get in is because we are building this metaverse universe. Those two narratives can join together. Maybe again, maybe it's going to be something like that. There is another that I would like to see, is something much more social. I'm not talking social, is not for the social network. I'm talking like to actually benefit for the social people. I think crypto has crypto philosophically wise has the access, can give access to finance to people that otherwise would be unbanked or unfinanced. So what AI can do for these people is effectively bringing them a service that otherwise it's unreachable. And I'm talking about people that makes $200 a month, $100 a month, which, by the way, are the majority of the world, right? If you use crypto, if you add some AI feature somewhere in order to make it simple, easy, and accessible for these people to actually get in the market, get financial services, that I would see as a positive. Not sure if this will happen, but I think this is extremely positive effect that we can have.
We should talk about this, Marco, offline. Maybe we can have a complete separate session on this alone, which I find a very fascinating topic. But so you're confronting things like the remittance business, or the underserved, the unbanked, 2 billion unbanked people worldwide, right? And with a internet connection or mobile phone, they can access this world. They can put their $100 or a fraction of it at work in this ecosystem. What are you actually referring to? Just is it an educational device helping them navigate this complex world and make it simpler, easier? I mean, there are very intuitive one-click wallets.
No, I don't think it's that. I think it's difficult for us Western-born and breed people understand this. But if you're born in a Southeast Asia, Central Africa, or Africa generally, but let's say Central Africa because North Africa is some part of it are doing well. Some part of the Middle East, Southern America. There's something that, like Alex said, it's difficult for us to understand because we don't have that in mind. Is what people globally we qualify by the amount of money that you get, right? But in the West, we are qualified on the amount of money that you get, period. That's it. There's no other complexity. But if you're born in this country, in those countries, you can even doing well relatively to the currency that you are getting, and it's not your choice. It's mandatory for you. You cannot, and in fact, there are some places that put you into jail if you have different currency in your wallet, if you're a citizen of that country. But the currency in which you're making your earnings, it's so volatile that crypto is nothing. Crypto is nothing, and the worst thing is that you have no way out. So
Sure.
the $200, right? It's $200 because we say it's transformed into currency, but relatively to where you live, you're actually making a good living, right? So I think what I'm mentioning, what I would like to see is something like a way to stabilize the global return that you have. So it's not investment. His market is hedging risks. He's making sure that if you have done everything in your power and you have done your job as a citizen, as a productive member of the society, but you were born in a country where the currency is hyper volatile, and if you try to immigrate, then you're treated like an illegal immigrant most of the time. But if you stay in your country, you are subjected to volatility of your currency without your control. It feels to me like, we're just giving you a bad set of cards and they say, well, deal with it. And I don't think that's fair. We should incentivize people to stay where they are, building where they lived. But at the same time, we need to be allowing them to have a good life if they're doing the right choices.
I'm 100% with you, Marco. I guess my point is, if you look at crypto adoption by percentage of the population, the top 9 markets in the world are the markets you're referring to: Vietnam, Philippines, Nigeria, and so on. So I mean, that already shows how much of this is already happening, hedging back into stablecoin. That it doesn't have to be the volatile ones like BTC, for instance.
I still believe it's more Bitcoin to me. Like if you're able, like Bitcoin use case, and people don't talk about it. As you talk about remittances, a bit more specific. I would say it could be the worldwide reserve asset.
Yeah,
worldwide is the key word. So it's a store of wealth, but in a worldwide breadth and expansion. It needs to be, it could be like that, and it could be, since it is accessible for everyone, even in small parts, it means that if you can stay basically in your country doing your job, make sure that you do a good job, and put your money, the reserve of your money goes, instead of going to the central bank of your country that could just, you don't know what they're doing, you go in Bitcoin, it stay there, it's safe. And having a solution that it's all automated and it's all it's simple enough so that you can have access anywhere in the world with small connectivity, with an easy path in and out, then you have a service. Then you have an actual use case that traditional finance do not have, because that's the issue, right? We do not give any solution for these people, any whatsoever.
But this is kind of the initial prophecy of Bitcoin, right? When they designed the supply itself, they were saying they took kind of, they said like the total supply and why you have 8 decimals. So 1 Satoshi is like 8 decimals of Bitcoin. And if you take the old money supply, you have 1 Sat equals $1 when they launch it, more or less. So that makes you, I think it's $1 million per Bitcoin at the end. And it would absorb the old money supply. It was like back in 2019, 2010. I might be wrong, but I know there's some math and some guys trying to understand why the supply was like 21 million, and this would have made sense back then.
Yeah, so it's 21 million Bitcoin. One Bitcoin is 100 million Satoshis, okay? There is a theory that say basically is a way for every single human being to be under that umbrella. I think that's if you want, that's the solution, because well, I don't want to spend too much time, but you're right, Francesco, we should have like specific
yeah, we can cut Marco. I think it's cool because it will give us like food for the next
so
ones.
just like 1 minute pitch. The nature of the market is that, and this every capitalist study that, is that it basically cut the inefficient side to make it to become more efficient. So everything that doesn't work will be pulled down. And so it creates in an harmonized, it's naturally harmonized. And that's why it works, capitalism, because it's the closest thing that you have to the law of nature, okay? There's only one problem, is that humans will be put in the same equation. And so you need to accept morally that you're cutting down people to benefit a more efficient market. I think Bitcoin could be the solution where you make a equal, a fairer market field where everybody can participate, more or less the same condition. Okay, you have more money, but the access to it is the same. And today we do not have, and we are going into a world that is more and more. By the way, it's more and more efficient, but also more and more equal, globalized. In the 80s, when people say, well, in the 80s the situation was better, it was better in the Western countries. Western countries, relative to the poor country, the third world country, the gap was bigger. The gap was bigger, and that's why we were richer here. Now that we have more immigration and that we have third world country getting out slowly, or trying to get out of the third world classification of the poor situation, economical situation, that means that you need to have money flowing from the rich country to the poor country. That has happened, but only on the middle class level, if you rank it, right? So it's a multivariate equation. It's not just that globally everyone in the West has been less rich than the other. And that's because of access. Investment from the top 1% went in the third world countries, but we have not harmonized socially. We are still creating a lot of disparities. And how you see it is because these people are becoming consumers, but they are not able to produce in their own place. So what they're doing is they're moving from their country to the Western world, where they want to become producers, not just consumers. We need to give them financial access to stay where they are, become producers and consumer, by stabilizing the currency. And stabilization of the currency, it's something that after Bretton Woods, that was kind of the deal at Bretton Woods, right? Dollars everywhere.
we're opening up to many other chapters, so we'll cover a lot of this. But maybe one thing actually to tie what you just said there, Marco, which is from a social sort of individual enablement perspective. Maybe spoiler alert on the Van Eck predictions, but maybe I'll share one, which I don't think is a prediction, it's just fact. Argentina is likely to join El Salvador, the UAE, Oman, and Sudan in basically joining the pro-mining government-sponsored efforts, which puts a whole country, a whole government resources behind the participation in this economy, and that has internal spillover effects in attracting resources, keeping resources within economies. Okay, UAE and Oman may be reasonably wealthier than others we mentioned, but of course El Salvador, Argentina are examples of countries that haven't had it, particularly well for a while, and may well join or start off a new cycle. So it'll be interesting to see, when it starts becoming a country-sponsored initiative, the narrative starts taking a different dimension, I think. Guys, we've gone on for well over an hour. I don't know is there anything else I feel like we should have spoken about Ledger, Binance. There's quite a lot going on out there. Who knows if in the last 2 weeks we'll have any other spikes or crashes. There's always so much going on in crypto. But shall we keep our breath for another session next week and spill out whatever else we have in the bag?
Yeah,
yes, I agree.
Yeah, we'll just stop the recording now.
Crypto never sleeps, so yesterday news is old.